Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. Today is Wednesday, and it's the 13th of September. Just going to go ahead and bring up the disclaimers. Before I do that, just want to highlight my email address, rshaw@fxcm.com. So if you'd like to correspond, that's the email address to use. Let's go ahead and bring up the disclaimers, and I shall start off with the high risk investment warning. I'll keep that on screen for a few moments. Hey Raj, good morning to you. I got your email yesterday. Thank you very much for letting me know. A pleasure to have you on the webinar as always. Just going to go ahead and bring up the market commentaries disclaimer. All right, and just our references, MarketScope 2.0 and TradingView.com. I got an email from Moen just asking to go through the Japanese yen basket. We can talk about the Japanese yen. It's one that we don't spend a lot of time on. The reason is that the Japanese authorities tend to do yield curve control and are very vigilant in running their monetary policy when the rest of the world was tight in terms of their monetary policy. Bank of Japan was loose. They're still loose. And if you just take a look at this chart here, this is the Japanese 10-year. It's kind of staccato. The Japanese authorities are letting it run a little bit more now, but they defended the 25 basis points area, and then they defended the 50 basis points area, and they kind of let it run now to 70 basis points. But by and large, it's not running freely. It's not running according to market forces. There's intervention, and if there's intervention on the yield curve, it's affecting the Japanese yen. Okay, so that's just something that we need to know. Now, we've got FXCM's got a Japanese yen basket, and it's basically British pound, Canadian dollar, euro, US dollar, and Aussie against the Japanese yen. So it's kind of like an index. And this is the Japanese yen basket here, and you can see that it's moving in this southeast direction, right? The reason that it's moving in that southeast direction is precisely because of that yield curve control. And there is a point at which the Japanese authorities become uncomfortable in terms of how weak the yen is getting. So at that point, there is a risk of intervention. So you've got to be, if you are trading the Japanese yen, just understand that if the Japanese authorities intervene, there is going to be a lot of volatility, and it could move against your position extremely quickly. By and large, we just do a top-down analysis here as well. Starting with the weekly chart, you can see that it's below its 30-week moving average. Okay, and you can really see it's below the RSI is below the 50, which is the bearish side of the indicator. So there's a downwards momentum. Japanese yen weakening. If you go through to the monthly chart, let's go through to the monthly chart. And you can really see this is the Japanese yen basket. It only was introduced in 2019, so the history here would be limited. Let's just put in as much history as we can. There we go. And you can see that the 5-month green exponential moving average is below the 10-month orange exponential moving average. Again, there is downwards pressure. The RSI is below 50, but there is a level now that I think has got a high risk of Japanese intervention, and that is why you can see we've come to this support area here. Okay, now I'm just going to switch to US dollar Japanese yen, and the US dollar Japanese yen has the US dollar as the base currency, so it's moving northeast, meaning that the US dollar is appreciating against the Japanese yen, and we are at levels, this 150 level, between 145 and 150, high risk of intervention, to the point that there has been verbal warnings by the Japanese authorities saying, just be careful of, to all the speculators out there, just be careful, you know, because they'll do whatever it takes to kind of defend the weakening Japanese yen. And even over the weekend, we saw Governor Ueda of the Bank of Japan come in and say, well, there's going to be some data we're going to get at the end of the year, which may allow us to change our yield curve control and our negative interest rates. That in itself is a verbal intervention. What effectively happened after that sort of comment to he was being interviewed by a newspaper is the US dollar Japanese yen gap down. What does that gap down mean? It means that the US dollar is weakened notably against the Japanese yen. So we are in dangerous territory here if you are a Japanese yen trader, in that it's not really being allowed to move according to market forces, and you've got to be very cognizant of that. Let's just go back to the Japanese 10-year, and what we'll do is take a look at this. If you put this US 10-year, so you're looking at the US benchmark minus the Japanese benchmark of the Japanese government bond, so we're basically taking the spread here between the 10 years. Okay, let's put that in. Yeah, let's take a look at this on a weekly basis. And what I'm going to do is let's take out the EMAs as well. I think that the EMA is just making the chart a little busy. And here we've got the spread of the 10 years. Now take a look what happens when we put the US dollar Japanese yen underneath this. Okay, so we just click the plus button here. Okay, and you get a very strong correlation. The way that the spread moves is very much a driver of the US dollar Japanese yen pair. Can you guys see that? See, as the spread moves up, so does the US dollar Japanese yen. As the spread moves down, so does the US dollar Japanese yen. And you can see that this is the next leg over here. The issue that we have is that Japanese 10-year is being tinkered with. So the spread, in effect, is being tinkered with. And that means that there is an inherent danger. If the end of the year comes and the Bank of Japan says, all right, we're abandoning yield curve control, then we probably see a big spark up, in the, we see a big spark down, okay, I'm begging your pardon. In other words, the Japanese 10-year bond is allowed to, the yield is allowed to appreciate. So that pushes the spread down, and then we probably see the Japanese strengthen. But there's a big caveat there. The caveat is it all depends on what the Japanese monetary authorities decide to do. And, well, you know, that's sort of guesswork. It takes a lot out of our analysis, and that's something I don't like. Okay, so the Japanese yen is typically something that I avoid because some sort of verbal intervention can just really ruin a trade. So the idea here is, okay, that yes, there is an obvious relationship between the spread, okay, but of course the idea here is the spread's not completely freely floating, is it? What we can do is we can take a look at the spread and other Japanese yen crosses. So instead of looking at the US 10-year minus the Japanese 10-year, let's take a look at the German. Okay, so we put DE, and then we'll see if we can get some sort of correlation with the Euro Japanese yen. Let's take a look there. Okay, and let's put in Euro Japanese yen underneath. Okay, this is interesting. There's less of a correlation here. Let's see if you can just put in a correlation coefficient and see what we see. So the obvious correlation is US dollar Japanese yen. Let's just go ahead, put in the correlation coefficient between these two. And then we'll take a look at it in terms of British gilts as well. All right, so it does suggest that there is a positive movement up until about here. Positive movement up until there, and then we kind of level off. So this is even more difficult, in my opinion, to be looking at trading Japanese yen pairs because the correlations start breaking down on the crosses, and that in of itself takes a analytical tool out of our toolbox, right? We have gone up here, but have flattened considerably. Okay, let's take a look at it in terms of the gilt, the spread on the gilt. So instead of the German 10-year, just put in GB. Okay, and let's take a look at the pound yen. And we'll take a look at the correlations there as well. Okay, a little more positivity here in terms of the correlation. We just got to change up the correlation coefficient here from Euro Japanese yen to GBP Japanese yen. So the Euro Japanese yen is problematic. Okay, when it comes to the, we've got a movement here, a movement there, and then from about December 22, it kind of moves back to positive correlation. Okay. So as soon as you have this interference, Mohan, it makes life a lot more difficult for traders because you start losing your correlations. Once you start losing your correlations, that's an analytical tool that's been taken out of your toolbox because it's become effectively useless. So we've got to be very honest with ourselves if we're trading Japanese yen. Do we want to be exposed to a pair that has an added variable in? Because an added variable in is effectively making it more difficult for us to really get a handle on it. The big takeaway, in my opinion, is that yes, whilst US dollar Japanese yen has had fantastic correlation, we've got to a point where it is extremely dangerous that if we get involved, the Japanese monetary authorities may take positions to defend the Japanese yen, which will actually thresh our positions in the forex market. Does that help, guys? Let me know. We've been very sort of specialized, very concentrated on Japanese yen this morning. We're going to have to conclude soon because I'm going to go through to the crypto minute. I just want to know if this gives a better understanding of the Japanese yen. I think there are far better ones to trade because I just feel that the correlations. Okay. All right. Let's wrap up here, guys. Let's wrap up here. Thank you very much for attending this morning. We shall speak again tomorrow. Please join me for the crypto minute if you'd like to see an analysis on the cryptos. Otherwise, have a great day and a great evening ahead. Thanks very much, guys.